So after a little bit of a rough stretch, Thursday's job number finally gave us some positive movement on gold. And you see we ended the week with really a neutral day and then two bullish days. And as we go down to our lower time frame, you can see the consolidation that happened at the top of this range. And one more time frame down to the hourly, you're going to see this consolidation actually disguises itself as a classic continuation pattern in the form of a flag pattern. So for those who are looking for a potential bullish opportunity to get in gold, this is a great opportunity for a breakout. Now, before you do that, however, let me give you a warning because although this is a nice pattern, it looks clean, it's given us everything that we want to see. I'm not actually a fan of it, and that is because of the overall location. You see, I believe that the where is always more important than the what, right? The where is the location, the overall analysis. The what is the specific pattern. So even though the what here, which is the bull flag, is a good sign for a continuation, we're just not at a level in the market that I expect us to continue. And I got a comment under the YouTube video the other day where I explained this. I want to explain to you guys as well, where the trader was asking, Akil, what do you mean that price isn't at a good level? We've just broken a few highs. We've broken a high right here from late June on Friday. We broke in a high right here, because technically it would be a little bit higher, but you guys get the point, a high right here from early July, right? We have repeatedly broken highs. We have a bullish breakout pattern. Shouldn't this be a grade A trade? And my response was this: yes, we did violate those highs, but as a chartist, I'm always looking for where is the next high, where is the next level of structure. And if I just take my line tool out and kind of draw the ebbs and flows of price action, right, up and down, you can see that our next level of structure is going to be right in here, with the higher quadrant of this structure being right up in this zone. And as you can see, we are trading right at the middle of that zone, right at the previous highs. So therefore, we are at another stopping place where I need the market to show me a clue before I can make the prediction that we're likely to continue higher. Now, what would that clue be? Well, as always, I need a violation of that level. So a break and a close above. And if we can get that break and close above, then my expectation would be that we can travel to the next level of structure right here. Now, I am just one man. This is just my philosophy. I'm more of a counter trend trader than a trend continuation trader. I'm also heavily structure based. So this is how I walk through my analysis, but I can also see the case from the other side as well. You'd be saying that, hey, well, if a trend is strong, eventually we must break structure. And when we do get to those levels of structure, instead of holding, like what is my belief, I actually expect price action to break out. And well, we have a breakout pattern that would provide just that. And neither trader is wrong in looking at the market unless they are deviating from their way. So if I all of a sudden kind of change my mindset and say, hey, I'm going to look at this as a breakout. I don't care that we're at structure. I think we're going to go higher. Then that would be a bad trade on my behalf because it goes against my trading rules. Same as if you were looking at this and saying, hey, I'm a trend continuation trader. I like to involve myself in the breakout before we break out of levels of structure. That way I can get more of the move. But all of a sudden you don't want to take it now because we're at structure. That would be a violation of your trading rules, which would make it a bad plan. So again, ultimately, and this is what I tell the traders that I work with, we have to develop our personality and our philosophy in the market. That's how we create our rules around that. And then we must consistently follow those rules. So something that you need to do as a trader, if you're not at this point already, is you need to figure out what is more important. Do you strictly trade every single flag pattern no matter what? Or do you only trade flag patterns that come at very specific locations in the market? I'd love to hear what you guys think and how you personally trade them. You can leave those comments below because I always think it's good to have the conversation. And of course, if you have any questions about the analysis or want to share your ideas, let me know as well. All right, good luck in the markets this week. And until next time, plan your trade, trade your plan. Take care.